Hi, my name is Matt Theriault, CEO of Epic Real Estate, where we show people how to invest in real estate so they can escape the daily grind and retire early. So, last week, House Democrats spelled out their proposed tax increases, pushing higher rates on corporations, investors, and high-income business owners as they try to piece together enough votes for legislation to expand the social safety net, infrastructure, and combat climate change. They are inching closer to achieve their long-term goal of reforming the federal tax system so that the wealthy pay a higher rate than they do now, or what President Joe Biden refers to as their fair share. The administration has their eyes on the bank accounts of investors and the rich, and I'll let you know who stands to lose the most. But first, I want to address the president's constant mention of the wealthy paying their fair share. You see, this is a narrative that is so easily debunked, but nobody, particularly the lamestream media, feels the need to do so. It takes no more than an elementary Google search to discover countless sources that confirm who pays the most taxes in this country. And the first thing to point out is that there is no objective standard for what defines fair share. It is a purely subjective concept. But there are facts which are objective. And the facts suggest that the US tax and fiscal system is already very progressive and already very redistributive. And these facts are very contrary to popular opinion. Internal Revenue Service data indicates that the wealthy in America are bearing the heaviest share of the income tax burden than in any time in recent memory. Conversely, more than 53 million low and middle income taxpayers pay no income taxes at all. And 6 out of 10 households receive more in direct government benefits than they pay in all federal taxes. Now, if we were to look back 20 or so years when the rich aren't paying their fair share movement began to really pick up steam, the top 1% of wage earners paid 38% of the total federal income tax bill in 2008. In comparison, the bottom 95% of wage earners paid 41% combined. And this wasn't a one-year anomaly either. In 2007, the top 1% actually paid more than the bottom 95% paid combined. And you might think facts like these would be enough to put the smackdown on the rich aren't paying their fair share fallacy, but it hasn't. I mean, it's still out there. A complete delusion that the majority of this country hold as an unquestionable truth. But how can you blame them? The president says it constantly.
And the wealthiest 1% of Americans have just begun to pay their fair share. I just think it's about just paying your fair share, for Lord's sake. Just pay their fair share. Paying their fair share of taxes. Just their fair share.
So it must be true. The problem is not necessarily that he's wildly misinformed about how much the rich pay in taxes, although it could be. I mean, maybe he doesn't know. But more so, the problem is the assumption that's built into that statement. Saying the rich aren't paying their fair share assumes that the government or other members of society have a right to your wealth, of which, per our unalienable rights documented in the Declaration of Independence, they do not. And who determines what's fair anyway? And why does the amount always seem to be increasing? The most recent government data available shows that in 2018, the top 1% of income earners, those who earned more than $540,000 in a year, earned 21% of all U.S. income, while paying 40% of all federal income taxes. The top 10% earned 48% of the income and paid 71% of all federal income taxes. Those are significantly disproportionate amounts and pose a legitimate, and I'd say an inarguable argument that the rich are paying an unfair share. Now, I realize this could be a very unpopular sentiment, but don't kill the messenger. I'm just reading straight from the IRS data. If you happen to know someone who thinks the rich don't pay their fair share, feel free to share this with them. I mean, if our leadership and its enabling mainstream media won't share the truth, someone has to, even if that truth hurts. Now, investors, pay attention. Biden's coming after your wealth in other ways beyond income tax. So the first proposal for investors, he's increasing most people's realized capital gains tax from 20% to 25%. However, there are some exceptions and some escalations based on a person's income. But it's the president's proposed 43.4% capital gain rate that is supposed to hit only those earning $1 million or more. That's what I want to draw your attention to. You see, you may not be a millionaire investor and feel it's not a big deal. But if you bought a house, say 30 years ago, that is now worth over $1 million, you could be impacted. And considering the booming real estate market of the last 18 months, there are quite a few people that just entered, and likely unknowingly, millionaire status, per the IRS's definition. And here's how it can get you. Wages can face federal tax of 40.8% once you include payroll tax. But hiking the top 23.8% capital gain rate to 43.4% would be a staggering 82% increase. And then if you add state taxes like, say, California's current 13.3% rate, the government gets most of your gains. Well, I'll just sell quickly before this goes into effect, you may be thinking. I understand. It's a natural reaction to a looming tax hike like this, a significant one. But as proposed, the rate hike is already in effect for sales after April 28th, 2021. So, too late. The second proposal for investors. Biden now supports taxing your unrealized capital gains, money that you haven't made yet. You see, this was once just a novel idea authored in 2019 by Oregon Senator Ron Wyden, who currently stands as chair of the Senate Finance Committee. This now has President Biden's support. I made a video on this just 6 months ago, and several people in the comments dismissed it as ridiculous nonsense. But here it is, right now, up for vote, with, this time, the president's endorsement. So here's the deal. Under current law, people pay capital gains taxes only if they sell an asset. This new proposed law, people would pay capital gains even if they didn't cash in on their assets. Now, under the current proposal, this would apply to billionaires only. But this would be a significant fundamental reform of the tax system, of which would break the proverbial ice to a further reach than just billionaires. Sound far-fetched? I mean, 6 months ago, y'all thought I was crazy. Listen to this. If passed, it would redefine taxable income for just a few hundred people, such as billionaires like Jeff Bezos and Warren Buffett. Now, there's not going to be a whole lot of sympathy for these guys. And based on their fortunes, I mean, I'd imagine they'll hardly feel it. So as of now, there is no official estimate from this proposal. But a similar idea, initiated in 2019 by tax professors Lily Batchelder and David Kamen, who are both now senior Biden administration officials, targeted a larger group, the top 0.1% of American households. Here's why this could be problematic for you and I, even if we're not in the top 0.1%. You see, they know taxing unrealized gains would be a tough horse pill for Americans to swallow. So let's start small, they think, and let's just propose it for a few hundred billionaires. That would be a much smaller pill for the people, one that should go down much easier. But they've already done the math on the next group of unrealized gains to target, the top 0.1% of households. Now, that doesn't sound like a big leap, does it? I mean, it's just 0.1% of households. How big of a leap could that be? It's a leap of a few hundred billionaires to 1.2 million households. You see, once that initial billionaire pill has settled and digested, the second 1.2 million household pill will go down a little easier too. And then whose unrealized gains are next on the list. This could be a very slippery slope. Third proposal for investors. President Biden wants a bigger piece of your investment income too. The plan proposes an additional 3.8% surtax on passive income from your investments, like your cash flowing income properties. Fourth proposal for investors. He's also coming after your retirement. You see, initially, he was after your 401k with a drastic proposal that would upend existing tax preferences for retirement saving in 401k style plans. That seemingly was put on the back burner for now with this proposal. I don't think it got the support that he was hoping for. So rather, he's working on a backdoor entrance through the Roth IRA by eliminating the Roth conversion of after-tax contributions to traditional individual retirement accounts. And he's limiting the types of investments that can be held in these accounts. Now, if you don't know, the Roth conversion, it's a little known technique, but perfectly legal and available and profitable for all Americans, allowing people to make annual tax-free retirement account contributions above government-imposed limits. The backdoor Roth strategy lets participants invested in 401k plans put as much as $58,000 a year into their 401k account and convert a substantial chunk of that money to a tax-free Roth account with a minimal tax hit if executed well. So if you're hip to this, or your CPA is, and you have the ability to do so, do it while you can. Because unlike the previously mentioned, the experts are predicting this one to sail right through. And this is unfortunate because the average balance today for a 401k at the age of retirement is less than $200,000. Hardly a retirement. A 401k investor who saves $35,000 for 25 years and converts those contributions regularly to a Roth would have an estimated $400,000 more at retirement. Now, that's still short of a respectable amount for one's retirement, but it is at least double. Okay, last thing on these proposals, a fun fact, if you will. I mean, it's kind of like, when you hit your funny bone, you laugh, but it hurts like hell. Most of the proposed changes that you have heard are to impact just those who earn $400,000 a year or more, of which is a completely arbitrary number, by the way. No one has been able to figure out where that number came from. So most of these changes would impact your upper middle class and rich, your small business owners and your investors, yet likely have little impact on the richest of the rich. And here's what I mean. You see, the richest of the rich earn very little from actual paychecks. For example, Mr. Bezos' salary as the founder of Amazon in 2020 was just $81,840. So new income taxes will have zero impact on the richest man in the country. I don't know. What are you going to do? Let me know below. And who else do you know that needs to see this? When their name comes to mind, please share it with them. Oh, and if you are already subscribed, I went ahead and I pulled this video out special for you to watch next. Otherwise, I'll see you next time. Thanks for watching. Take care.